Hello everyone, this is part 3, the final part of Introduction to Taxes. This is my more exciting part. I like formulas, I don't like words too much, so I might have a little bit more enthusiasm when explaining these particular slides. Let's not waste time and let's get started here. Taxable income. Your taxable income is your adjusted gross income minus your deductions and your exemptions. The example shown here is your adjusted gross income is $100,000. Your itemized deductions were $15,000, and you're the only person on your taxes, so $3,800 is that exemption. So overall, your total taxable income is $81,200. Here's a chart of the tax liability bracket. It's broken down for married, head of household, single, married filing separately, or filing together, and it pretty much shows you the numbers. What we have in America is something called a progressive tax system, meaning that the more money you make, it's correlated with the more taxes that you're paying as well. And you can see over here, pause this if you want to get a chance to actually take a look at the numbers before you move on to the next slide, which I'm going to show you the formula of actually figuring out your tax liability. And again, like I said in the first video, your tax liability is the amount of taxes you're paying percentage-wise based on your taxable income, which we showed you in the previous slide, how you figure out what your taxable income is. I've mentioned in the previous slide that America has a progressive tax system, so I'm not going to reiterate that again. If you look at the bottom, this is the formula that's utilized to find your tax liability. The formula goes as such: your base tax, which is the fundamental foundation of the amount of taxes that you're going to pay in your particular tax bracket. So if you see down here, this is the second tax bracket. The base tax is $870 because the beginning of this tax bracket is $8,701 plus the percentage of money over the base. So any money over that base is going to be taxed at 15% times your taxable income minus your base. And I'll show you an equation in the next, an example in the next slide, so you can get a better understanding of this equation. Again, we're going to use this particular tax bracket because I used it in the last slide. Let's say your taxable income is $30,000. So your base tax is going to be $870 again. 15% is going to be multiplied by your taxable income minus the base. So your taxable income is $30,000. The base in this tax bracket is $8,701. So if you subtract those numbers, you're going to get $21,299. Now what you're going to do at this point is you're going to multiply $21,299 times that 0.15%, which again is the percentage that you're multiplying over the base, which again was $8,701. And you get $3,194.85. You add that to that base tax, which is $870, and you find your total tax liability, which is $4,064.85. So with this added up with your FICA taxes is the total amount of taxes that you're supposed to pay to the government for the year. Again, if I went too fast, pause it, look at the equation again, see how I got the numbers, and move on to the next slide when you get a better grasp of what's going on here. Now we're going to move on to tax credits. Tax credits are the amount of taxes that gets taken away from your tax liability to further reduce your total tax liability. The difference between a tax credit and a deduction or an exemption is an exemption or a deduction gets applied to your taxable income. So the total impact that an exemption and a deduction have is worth a lot less than what a tax credit has. So say for instance your total tax liability is $4,000. If you apply a tax credit of $1,500, your total tax liability is now $2,500. Whereas if you look at an exemption or deduction, it's only applied to that taxable income, so it's only a fraction of power that a tax credit actually has, if that makes sense. At the bottom here, this is the 2013 tax year coming up, and this is the limit or the maximum credit that is applied to different tax returns. You can take a second to pause and look over it, see what the numbers actually are. Play around with yours yourselves. I'm sure many of you have already filed your taxes, but this is what it looks like for 2013. From here we're going to start on showing you the breakdown of the 1040EZ form, plug in a couple of numbers so you can get a better understanding of how to fill this out. Again, like I said in the previous videos, if any of you want me to actually add a 1040 form or a 1040A form and break it down from there, I'll do that as a separate video. It would take a lot longer, and I didn't want to extend this video too long. I just really wanted you guys to get a basic grasp of what's going on. Here, self-explanatory, fill out your information. On this one, this is your income when you get your W-2s. Whether you worked 1, 2, 3, 4, 5 jobs, you add your total amount up here. I just plugged in $30,000 right there. You look down at 2, look down at 3. If any of that applies to you, you add on to it. I just left it blank, which can add zeros or whatever the case may be. So adding 1, 2, and 3 together to find your adjusted gross income. There are no changes, so my adjusted gross income is the same as my gross income, which is $30,000. And because we're using a 1040EZ form, we're not going to get into the itemized deductions. So the standard deduction for the 2012 year for a single was $9,750. So subtracting that deduction from my adjusted gross income, you get $20,250. This is where we actually try to figure out what the refund is. You can get started. Let's use an example that the total federal tax that was withheld for you in the previous year was $2,000, and your earned income credit was $3,250. In line 9, what you're doing is adding the two together, which is a total of $5,250 for total payments and credits. In number 10, what you're doing is trying to find out your tax liability. Again, like previous slides, we showed you how to find your tax liability, and at the bottom again I show you a couple of outlines so you can use the equation again. We're in the same tax bracket with the $30,000 of gross adjusted income and $20,000, I don't remember the exact number, of taxable income. Well, if you use the formula, your tax liability is $2,602.50. Your tax liability is less than your total payments and credits to the federal government, which means that the difference between the two, like you see here in 11A, turns out to be your income or your refund. So $2,602.50 minus $5,250 shows you a refund of $2,647. The numbers are there, very self-explanatory, very easy to figure out. I hope after these 3-part series you really see that this isn't magic, that tax preparers or tax experts or CPAs aren't really doing anything spectacular. This is all information that you can do yourself, whether you're going to still utilize a tax expert or use online mediums, e-filing yourself. The information's here for you. Again, if any of you want to see the 1040 form or the 1040A form in more detail, I just wanted to keep these videos short and sweet. I will put up another video for you guys if you want to see that. Just send me some requests and let me know if that's something that you want to see. I appreciate your time. I hope you all have a good evening, and I really hope that I helped you guys learn some new, exciting information. Take care. Enjoy your evening.